Hey everyone, happy Thursday, April 30th. It's a little after 10 a.m. on the West Coast, and it's time for another market update. Well, I didn't do a video last week, first time in forever, basically, that I haven't done a video, but I had some stuff going on in my personal life, so I wasn't able to do that for you guys, so I apologize. I'd like to say that since we last talked, everything's gotten great, and mortgage rates have dropped, and everything's going wonderfully, but unfortunately, that's not the case. As you guys, I'm sure, have seen in the news, the war with Iran continues, and the blockade of the Strait has continued, and that really has had a lot of effect on the markets. Obviously, that affects oil prices. Oil prices, like we've talked about, basically make their way into every part of our economy, in inflation and whatnot. So that by that blockade continuing, and it sounds like it might continue for even longer with recent talk. That has not been very well received by the markets, and that makes sense because again, anything that drives up oil prices is not going to be what we want. So war's still going on. Not much to say there. At least they're not. They're not. They're not. People aren't losing their lives right now. It seems like there's not any fighting going on, but the blockade has continued, and that has continued to have effect on our economy and the world economy. Next thing we got. So yesterday was the Fed's most recent meeting coming to an end. As was expected, it was a 100% chance they were going to do nothing, and they did nothing. But there was some interesting stuff that came out of this meeting. And the first thing that happened was four people dissented. And that's the most that have dissented. Usually they're pretty, on the same page by the time they vote. That's the most that have dissented since 1992. One of those, Stephen Murin, actually wanted them to cut rates. He's the one that always wants to cut rates, which I appreciate, but no one else is agreeing with them. And the other three, their issue was some language in their statement about how in the future, maybe a lean towards cutting rates, and they wanted to remove that. So that's not necessarily good. They're thinking there's less chance to cut in the future. And then the other eight people just voted, to keep basically the status quo. So again, most divided since 1992. That was interesting. And the other thing that came out of this press conference mainly was Fed Chair Powell. His term is coming to an end. There was some political drama going on over his replacement, if it was going to be held up. That blockage in the Senate has been cleared, so his replacement is now all lined up. So generally, what happens is when the Fed chair's term ends, a lot of times they still have time left on their governorship, term. I think he's through 2028, December 2028 on that. But generally, they resign from that. They just go away after the chair. Fed Chair Powell, however, is saying he's going to stick around until he's, can't remember the term he used, but basically until he's confident everything's going to be running correctly, which again is a political thing. It goes back to this tiff he's been having with the president and so forth, and DOJ. But again, a lot of division within the Fed, a lot of uncertainty, a lot of drama. So not necessarily what we want to see. We want them to be kind of like the cool hand that guides things and isn't reacting emotionally. But it seems like some of that is happening right now. So again, Fed did not do anything, kept their rate as was. Markets didn't really react. They had already reacted some oil news earlier in the day, and that was really the big driver yesterday. And right now, it's showing about 95% chance at their next meeting they do nothing as well. That'll be at the end of June. Next thing we got coming up, we have today we got actually the March PCE, and it jumped as expected. So this is inflation. This is the Fed's favorite form of inflation to take a look at. We did get a look at this kind of earlier with CPI, so we knew, and again, just knowing how things work, we knew we were going to see some jumps this month because of the war. And as you can see, the headline did jump. It went up from 2.8 to 3.5, month over month, again, 0.7, because that was, last March 2025, that number was zero. So this month replaces that month, and that's why you would get that jump from 2.8 to 3.5. And the core jumped a little bit up to 3.2%. These were all expected. This was basically exactly what was expected. However, again, not a good thing. And again, this is directly, connected to the war with Iran and oil prices and gas prices and how that affects our economy. So, as expected, but not necessarily a good thing. But again, the markets were kind of distracted by other stuff, and just like with the Fed stuff. February appreciation. So we got both the Case Shiller and the FHFA look at appreciation for the month of February. This always lags a little bit behind. We're now at the end of April, and we're just getting the February numbers. And this chart right here is just Case Shiller. Case Shiller includes everything. So it includes cash deals and jumbo deals as well, where the FHFA takes out those types of transactions. And this came in month over month, nationally, seasonally just up 0.1%. Year over year, still up 0.7%. The 20 city index dropped by 0.5%, or 0.05% month over month. But really, this was as expected and pretty flat. But it was also kind of disappointing because in the month of February, rates had dropped leading into this time period. So generally, when rates drop, we would expect to see a rise in appreciation, but we didn't get that. So that's a little disappointing. Again, the markets are pretty weird right now. A lot of uncertainty going on. So that obviously has a lot to play with it. And rates came down, but still not as low as I'm sure most people would want. So again, a little disappointing to see it so flat, but better than the other alternative, which would be a big drop in value. Next thing. So where does that leave us? So last time we talked, we were down to 6.32, down but up basically to 6.32. Today we're at 6.45% according to this lender survey for the average conventional for very well qualified borrowers. Yesterday it was actually up to 6.5, so it dropped a little bit today with some talk in the markets, but again, way higher than we want it to be. We had gotten down to just below 6. Now we've jumped about a half point, and I would say about 2 months now. So pretty disappointing on that front as well. But again, it could always be worse, and we did make a little bit of a headway today, dropping from 6.5 to 6.45. Once the war with Iran gets settled, once oil starts flowing freely, let's say throughout that area, then we can expect rates to start dropping down again. But how far they drop will kind of depend on inflation and on the labor markets. So again, not good that we lost all that ground we had gained. Important dates. So what do we got coming up? We got the BLS jobs report May 8th. We got CPI inflation report May 12th. Get another PCE inflation report that we got today on May 28th. And then the Fed meets again June 17th. So we'll actually probably get 2 BLS job reports, 2 CPI reports, and a PCE before Fed meets again. Again, like I mentioned earlier, 95% chance right now the markets are saying the Fed will do nothing again, keep the rates exactly where they're at. But like we've learned over the last few years, a lot can change in a month, so or a little bit over a month. So it'll be interesting to see what happens in all these reports. Again, but the main driver really is going to be that war with Iran and what ends up happening there, because it has such an effect on our global economy. So if anybody needs anything at all, please don't hesitate to reach out. Otherwise, I hope everybody has a great week, enjoys the sunshine, and let me know if you need anything. Thanks a lot, guys. Bye-bye.